Hey everybody. Yeah, I'm sure everybody's handling heavy equipment this morning. I don't know. Welcome to the show. Got this one's like turquoise. It's kind of interesting. It's I guess guava flavor. It shows up almost clear. Anyway, you see the red top or pink fuchsia top. Welcome everybody. Lieutenant Colonel Goose, good to see you as always. Sturge, Logan, Terry, David, Svenborn, Donald, Kevin, Mary, Rob, Mark, Cliff, Marianne, Dawn, Garneau, Rob, Frank, Pat, Mad, Sledge, Ted, B, Darren, Diane, Kimberly, my favorite subscriber in the whole world, in the chat. Welcome, everybody. Fred, JB, and welcome, everybody. Good morning. Welcome to the Confused Economist. I'm your host today, and we're going to dive into the latest economic data. So full of contradictions. Well, it makes politicians' promises look straightforward. So the government just dropped the latest personal consumer expenditures number, or PCE, this morning. And let me tell you, real page turner. That is, I guess, if you enjoy plot twists, you're in for a treat. So anyway, jumping into it. The headlines, PCE, well, it's up 2.7% from a year ago. A little hotter than last month. Now, you might have also heard about the CPI a few weeks ago, which also measured inflation. Think about it this way. CPI is like your friend who only eats at fancy restaurants, complains about the price of everything. And PCE is like your other friend who, when the fancy restaurant gets too expensive, says, I'm good with the gourmet hot dogs. PCE is a little more flexible, and right now, both are telling us that things are getting more expensive. Shocker, right? Just at a slightly different pace. So the good news, your money is still losing value. Wait, that's not good news. I guess the question is how fast. But this is where things kind of get interesting, maybe. Now, while prices are still climbing, the American consumer, that's us, are spending money like we just won the lottery. That's always good, right? Consumer spending is up a whopping 0.6% in a single month. We're out there buying everything that isn't nailed down. Services, goods, you name it, we're buying it. It's like we looked at the inflation numbers and said, challenge accepted. Now, with all this spending, you'd think the job market would be pretty okay, right? Well, this is the plot twist that got, I guess, kind of cut Powell up and got the rate cuts going. The job market actually slowing down while we are adding jobs. It's at a snail's pace compared to the past year or so. The unemployment rate starting to creep up a little bit. So to recap, prices are up, spending's up, job market's down, and it's like we're driving a car with a full tank of gas, but the engine starts making some weird noises. What could possibly go wrong? This brings us to the Federal Reserve, the people who are supposed to be in charge of the whole mess. They're in our leader, Jerome Powell. Well, on one hand, they see inflation numbers and think probably should keep these Fed funds rates up a little bit, kind of cool the inflation down a little bit. But then you look at the slowing job market, and if we keep rates too high, we might cause a recession. That would bring prices down way too fast. So it's like they're trying to walk a tightrope over a pool of sharks, and the rope is on fire at both ends, and we're all standing on the sidelines trying to figure out where we should place our bets. And that, my friends, is the multi-million-dollar question. Where do you put your money in this confused economy? Well, if you believe the consumer spending party is never going to end, then discretionary consumer stocks might be your jam. These are companies that sell the stuff we want, but don't necessarily need. Think about it. Restaurants, travel, luxury goods, as long as people are swiping their credit cards, those companies do well. But what if you're a little more cautious? What if you need that funny noise in the engine to stop? I mean, maybe you should have a backup plan, right? That's where dividend paying stuff, stocks, ETFs, probably come in. They're boring, reliable, especially if you look at the dividend achievers list. They've been around forever. They pay you a little bit of money every quarter just owning their stock. Maybe you can sell some upside calls. It's like getting paid to wait for the economy to figure this beep out. And if we are in an extremely inflationary environment, those dividends can be a real lifesaver, potentially. And then there's real estate, a classic inflation hedge, but with the real interest rates still pretty high. It's a bit of a wild card. It's kind of like a fixer-upper house out there. Could be great investment, but it also could be an absolute garbage money pit dumpster fire. You have to be selective. So there you have it. Economy is beautiful, confusing, hot dumpster fire of a mess. But within that mess, there's always opportunity. You just have to know what to trade and what to look at. And that's why I'm here every day. And that's the opening monologue, everybody. Stick around. I got lots of stuff to talk about today. So let's jump into it, shall we? Firing off. The disclaimer, all trading involves a substantial risk of loss. Past performance, not necessarily indicative of those future results. Just because I got stuff right in the past doesn't mean I'll ever get something right in the future. Yeah, got that ghost can. So this show intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money. Surprise. If you desire personal financial advice, hire and consult a financial advisor. It's not what I do. I'm not going to tell you what to trade to make money. I'll just show you what I'm doing. You can ride along if you want to. And let's check it out over here. Refresh. All time, 25. Booked a couple nice winners here. Rolled forward on Chewy, rolled forward on Docu. That was from last week. And I booked out one that I had open for a long time that I guess because the limit order, the gain is way back in the history. Probably 2 months ago. Anyway, there you have it, everybody. Still making money. The month down to 1,000. Although this is weird because Robinhood says I've made $2,000 this month, and this says I've made $1,000 this month. So not sure what the difference is. And that's booked profit, so I don't know. No idea. I'm not digging into it. Anyway, how do we make money today? Well, Tesla. Old Elon out there saying that they're going to shoot out FSD 14, which is supposed to be some sort of revolutionary, brand new change to the way this thing works. I don't know. We'll see. I've only really had 13 on my truck, so I'm not sure what a big major version change is going to bring. 13 is pretty good, so we'll see what 14 does. That's coming. It's supposed to be out next week, potentially. We'll see. Elon always says stuff, and then we'll see if it actually happens. So, economic numbers today, the PCE, and you can see right there, year over year, 2.7. Expected a 2.6. I guess we expected 2.7. Prior was 2.6. Just run a little spicy. But I guess the stock market liked it because we're up a little bit in the pre-markets. Spiking. Correction over. Let's see, it was the 1 hour dip below. 4-hour still down here. So this is still potential. So that we've done these little bumps. We can still do this. Let's keep it in mind. That potential is still sitting out there. Although we're up pretty good off the low already. Look at this big picture pullback here. I did mention we may hold right there. So far, we back tested it once again. If we get below that, things can get spicy to the downside. So we've got resistance coming up right up here. 67.10. Hold underneath it. Sets up the next potential leg down. If we bust through it, 6,800 probably in the cards. Remember, this is the futures. The actual cash index, just a little bit different, but we did hold yesterday. We did hold. Held the 1 hour. That's the one I knew there was a 1 hour. We held right above the 1 hour. Market's not open yet. Got 2 minutes, minute and a half, whatever. And so right now the resistance hanging out right here. Break back through. Setting up the upside. The numbers here. 67.18, 67.35, and pretty close to 6,800 right up there. If we break down, that's where things get a little more exciting. So there is a divergence, if you want to call it that, between the futures and the cash index. Usually we have to bring those back in alignment before we make a big move in the market. Just saying. So right now we have kind of these two at odds with each other. The cash index and the futures. So we might see, if we get below this area right here, we might see this come on down to this kind of area. And it's not going to be, it's probably not going to be in one day. But crazier things have happened. Could happen in a day. So NQ, it's kind of interesting because S&P bottomed later in the day, but NQ bottomed earlier in the day. Coming up to its resistance right here, 24.8. Get through that. We're setting up the rally. There's the market. Ooh. IWM had a golly. Just reading some of the alerts. So this one fired off yesterday. I wasn't paying attention. Burning it down. Wait for this to come down. A, B, C. Absolutely beautiful correction. I had an alert sitting right at the lows, or just below the lows, and that fired off yesterday. It was while I was doing the morning show, but I missed it somehow, so I apologize for not bringing that up. If you wanted to play this, potentially, probably, we're getting at least below, so the minimum thing required for this to complete is a low lower than that low right there. That's the minimum thing. And I expect this to get a little spicy because that's a 1-2. We can see a little bit of acceleration right here. A little bit of acceleration. Now, it doesn't have to, but that would put us down to 43 on the next drop right here. 44. How fast? I don't know. Playing out in October, November, at least. I mean, we've been going pretty good pace here. It could take a breather, but if you're not already in it, let's jump over and take a look at the options. You can play out to November. Could do something like, that's cool, the prices aren't going to load. Could do something like buy a 50, sell a 42. Could buy a 47, sell a 42. So you would buy and sell. And this is on the put side. So you'd be buying closer to the money. Here's the money. Selling further down around the place where you expect it to come down to. The out of the pocket expense when you buy this, along that. And then you offset the cost. You kind of finance it a little bit by selling this. You short that one. Maybe like, well, what's the risk? The risk is whatever you spend on this. All right. So if you were to spend like $1.40, you're like, okay, well, how much money can I make? Well, the maximum profit right here is the difference in strikes. So $5 minus the $1.40 you spend to get into it. That's $3.60 potential upside, which almost 300%, not quite. It's like 260% upside right there. If this was $1.20, it'd be 380. So we'd be over 300% potential. Now, if you were to do this, maybe you just go for a double. Double your money, 280. That'd be pretty spicy, pretty good. Then you get out. That'd be the GTC order. If you got into this, put that GTC on there at 280, and then you 2x your money. Not bad. This would be by November for that to play out. Now, I mean, a lot of people are like, I think it might happen faster. Well, you could go to October. You could go to Halloween. You can play any of these different ones. Maybe you think it takes longer. You can go out to December, January. Maybe you want to play bigger. But remember, the only thing that really has to happen is going lower low than this, down here at 46. Now, the proportions that are in place look like we might push it on down into this zone, but nothing's guaranteed. So if you appreciate that, let me know in the chat. Last time I pointed out one of these downside plays, like on UNH, things got really spicy really fast. I pointed it out right here, and things kind of escalated. So anyway, spicy. Russell. This looks like it might. Looks like it's taking a breather here. We might come back down and retest that zone there in the coming days. Oil pushing back up through. Still sitting at a coin flip. We haven't confirmed anything. This is lower highs. This high, and this high, and that high. Still lower at this point. That's downward pressure. Still expect something down in the 50s, but time frame, this can just sit here indefinitely and then decide to do the flush out. So right now we're just kind of churning this area. Not really doing anything. This is like the most boring oil chart I've seen since last year. Looking at late last year, it's just boring as crap. And then we spiked and dropped out. It may do that again. Like we may get a little spike and to a lower high and then drop out. I don't know. Let's see if it repeats the seasonal pattern. Gold had a little recovery yesterday, but it didn't make a higher high. It's a lower high. Be careful. Staying long. Gold right now. It's kind of a warning shot. Little baby move here. Let's move down off that all-time high. Coming up to the 618 retrace right here. Next move can take us back down pretty quickly. Gold likes to jump out the window. Next level of supports, I would expect on the downside back to 3,700. Does it have to? No. Is that kind of the pattern set up? Yeah, especially with that choppy overlapping three-wave junk right there. Just be careful. Protect your downside. Know where your exit button is. Know where the eject handles are. Bitcoin got ugly. That's the first warning sign that this whole crypto summer is over. First warning sign. Now, we did push the limits here. If we turn here, everything's still okay. That's a warning sign, though. We get confirmation, the first confirmation, when we break below here, that things are nearing the end of this cycle. Now, it kind of wrecks my bullish expectation here. We've gone off the rails at this point. We don't have a reversal off of this yet. Right now, we can get continuation. So there's a few things we got to watch for very, very closely here. Thank you, Ulta. This high, this low. Very important level right now is right here above that high that we made before we just took this dip. If we come back up and turn down off of that, that is a big red warning light that this is done on the upside. Big red warning light. This is done. If we come back up and reject off of that, big red warning light. I'm very serious right now. Very serious. Like this would be a sign that you should lighten up the load if you're expecting this and we do this. We're in trouble. Now, if we continue on down right now, this is most concerning to me. Now, if we were to get continuation right now and we look at this high, this low, this high, and we're to take this current path on down right here, that might set up a bigger pop. We might actually exceed if we do this right here, right now, without retracing big or anything like that. That right there can set up a mega pop. Probably be the blow off top finale for crypto summer. But this is the first warning sign that we're late in the game. Now, if we get below this, you might consider lightening up and then re-adding. It's not a huge deal, but that's like about $10,000 less. About 10% down on Bitcoin. Retest that low over here. That can set up a bigger pop. But So nothing's crystal clear at the moment. Muddied up the path. That's the big news. So we're looking for this danger zone and potentially that supports. And this would be the target area if we do break that support. Possibly all the way down to 93. I've kind of been a little cautious, especially since this one decided to get a little funky. Now, that's potential. If we turn higher here and break back through this orange zone, that's kind of saying, hey, we finished this correction. Game on. But if things escalate here on Ethereum to the downside, roadmap line still about $400 down, a little over 10% more down. It's another warning sign right there. Another warning sign. So yeah, I'm not liking this price action, quite honestly. I was suspect of this even when we did this down here. It came up, bounced right off the all-time high. Yeah, we did set an all-time high, but we still have this big downside potential going back down below that low in place. This was not bullish. This was a corrective price action that stopped right at the warning. That stopped right at the proportion for this to happen. This overlapped. This was a deep retrace. This happened really fast. Classic A, B, C as an A, B, circle them here. C potential. For all the people that think this won't happen, this is real right now. That if we start breaking through the roadmap line, this becomes really real for crypto winter, and crypto winter might be here sooner. So there you go. Government shutdowns don't matter for the market. We talk about that stuff every time it happens. They'll probably do a last minute Hail Mary. There's not really anything, like, it's not going to cause some pandemonium. Could spark a sell-off for a little bit. Generally, they pass a resolution and back pay everybody, and everything's fine and glorious and whatever. So I don't think shutdowns matter. Played through several. Doesn't seem to matter. So is this a bull flag, or is this the start of something deeper? On NKD, we've kind of hit the wall here at the 1618. So we may have to do another retrace before we can push that even higher again. We're a long way up from the roadmap line. 2 standard deviations away from the roadmap line. Three is usually where things get crazy, but the third standard deviation is like going to the moon right now. See, last time we hit the third, caused a pullback, and then spiked the second, and then we got a big flush out. And this one over here, we just rode the second, rode the first. We just kind of stayed in the first standard deviation away from the roadmap line, and it dropped out. So this one's hanging with the second. Didn't really make it to the third, so I'm not really concerned about a pullback right now. We can ride that second standard deviation for quite a while. Just need a little cool off. So could pull back to 44 and then get some more upside. Dollar. Probably going to spike that roadmap line. Coming up into the resistance right there. I would expect it to spike through. So far, we just have three-wave move. We may prolong this last move until right over here, another couple weeks, when everything can come together in that 100 to 1272 area, at which point that would be a three-wave ABC upside and indicate that we're going down again to a lower low. So keep an eye on this right there, but it would seem that maybe we're going to come together right over here. We'll see. We'll see. Apple. Let's turn the standard deviations off for a minute. Apple grinding here. Lots of reports about strong iPhone 17 demand. People raising their targets to 290, which just happens to be the 1272. If we can actually break out, those will be target zones 275, 290. I'm not feeling particularly spicy about it, so I'm not messing with it. Plenty of other opportunities without messing with the third largest company in the world. Nvidia number 1, Microsoft number 2, and Apple number 3. Google coming in here, number 4. Be careful chasing the biggest dogs. Now, Amazon could still add significant, you can have 50% and just join the $3 trillion club. Whereas Meta can all dang near double and just join the club up here. And just be in the $3 trillion club right up with Microsoft. Broadcom can double. TSMC can double. Tesla can almost triple. Could triple. Still be in the $3 trillion club. So I see lower opportunity up here. Bigger opportunity the further down you go down here. Because it doesn't take nearly as much money to make a giant impact. That's why small caps can move several hundred times their share price before they start slowing down. Once you get up into the top, the law of big numbers takes over. Now we're back down to this vicinity on Amazon. If we hold it, great. If we don't hold it, we haven't been able to break that gap yet. That gap sitting there as resistance, putting downside pressure, and we might come down here, make a lower low on Amazon. Google still set to make that 263 upside. Meta, this is starting to look like we're going to take a dip back to the roadmap line, similar to Amazon. Then we'll see. We did hit the upside target. 75% of the time we do that, and then go back down. Microsoft. So we've got upside resistance right here. We're going to take this even higher. Target's up here. So if we break through that resistance, that's the target up there. 565. If we reject off of 530, probably going down here. Support down at 470 area. That's the outlook on Microsoft. NVIDIA, kind of update these every day. So NVIDIA just hanging at the top. Like, that's basically ground nowhere at the top for 3 months. This is indicating that we're going to take a bigger swipe down. Anything lower than that low right there can set this up to go higher again. Next level higher, 212. Tesla just can consolidate right under that 450 target. Keep getting close. That was when I said there's resistance here, there's resistance here. Now, yesterday on the dip, more multi-million-dollar call buying. A lot of November call buying yesterday. A lot of people looking for 500 to 550. If you think that the options are rich for that, you play something like TSLL, TSLT. Just be careful on leverage. Buying just shares would be a great idea. But if you feel extra spicy, you can play some options. Netflix, still cooking this potential correction finish up here. Nothing changed. Just grinding potentially lower. All right, I go pull all the things moving up $2 or more, put them on the gainers list. Then I pull things moving down $2 or more, put them on the decliners list. And then I also bring a couple setups that are ripe for entry today based on my signature roadmap bounce pattern. We'll see what happens here. App loving. Looking for 695. Lily. Wow. So be careful here. This rejected the roadmap line just like it did over here and here. Those are warning signs for a lower low. Another warning sign for another potential lower low. Now, if we can get above that upside resistance right around 770, then we have the downtrend of highs coming across here. Roughly 840 right now. If we get above that, we can go higher. But until that all happens, this might make a lower low. And we confirm that we're probably going to do that with a drop below. It's the same roadmap bounce pattern, just upside down. Came down, bounced. We get through 680, 675. Probably setting up for that move down here. I don't trade the upside down ones because the market doesn't tend to go down. Over the last 40 years I've been trading, up is usually the direction. Every year, 9, 8, 7, 8, 9, 10%. Boeing, set up for a bigger drop. Test of support. 200. 190, 170, 160. It's a ladder of supports. I would love to see it hit this one because that sets up the bigger potential bounce. Reddit. Make the tickets more prominent. What tickets are those? So Reddit retraced the breakouts. 308, next upside if we're going higher. We get through this, back to the roadmap line, around 165. CRNX, the pharmaceutical. Biotech pharma I just don't mess with usually, so be careful on this. It's unreliable, and we're in kind of a questionary zone here. Might resume downside. So that's where A, B, C right there. The tickers are very prominent right here. Nice black text. P-car. I don't know how to make them any darker. And resistance at the roadmap line. Farming machinery. That's potentially 3 waves done, but I'm not keen on this price action off of the low right here. And we didn't quite get down far enough. So that right there can result in another dip pretty quickly. Texas Instruments. A lot of these were some of the most beat up yesterday. That's a downtrend, looking for a bit lower leverage. Coin, so close. I've said for pretty much all of August, all of September, that we might need to dip down into this roadmap line and make a low lower than that low before crypto can go higher. Seems to be what we're waiting on. And MSTR got whacked pretty hard yesterday. Right down to the support. Look at that. So this was a red flag too, because that move right there, that level that we hit, can get continuation. We could come back up. We bounced off the bottom right there. If we do that again, it's a big indication we're going down harder. IHG, just grinding in here. Yeah, I'm not feeling particularly strongly about this at all. Probably going to go on up 126, 128 bulls. And the ticker's up here too. Ticker's up here. Ticker's in light gray back here, so I can see. And then ticker's over here. I mean, ticker's 3 places on the screen, 4 places on the screen. Another one right here. Right there, right there, right there, and right here. And then it tells you what it is right there. So, plus, I'm saying it basically. Bulls is a 3x leverage ETF or ETN. Exchange traded note. CoreWeave. Caution. Just did the proportions for an A, B. C can take us down, down, down. Somebody yesterday, when are you ever going to be bullish on CoreWeave? Maybe when it makes a lower low. But it may not come back from that, so be careful. We're in crypto winter. This stuff's going to get destroyed. And somebody wanted to know the best way to play downside in crypto. This one. Just 1x leverage, right? Don't go too crazy. So 1x leverage on crypto bear. Do that, or you play IBIT with puts, spreads, or puts, long puts, but I do probably put spreads or something like that. Maybe this one's going to get hit hard right here. We ramp this down. Probably going to see that get pretty wrecked also. See where it came from, back down here in the $10 area. CIN. Whew, lofty. I got past that. So this is... All right. See what it did last time we pushed. It did go higher, but then it went lower in a big way. So we may pause for a minute, spike again, and then get a big pullback here. So you can see it again right here. Pattern reoccurs. This one didn't get the big pullback though, so it doesn't have to happen, but And you notice it didn't do any, like, this is not, a lot of people say, well, this is a customized Bollinger Band. It's not Bollinger Bands. So just be careful. A lot of people are talking about how Bollinger Bands hits the top and bottom. These are not Bollinger Bands. These are standard deviations. Which, funny enough, is kind of what Bollinger Bands are, but they're not Bollinger Bands. At least not in the typical sense. I use the Bollinger Band code to make this. So that's 3 standard deviations away. Not likely to get big upside continuation at the moment. AVAV, probably going to come back down. I bailed on this one yesterday. If you hold on to it, good job. May go higher. It'd have to be a new pullback for me to, although we're trying to confirm. Yeah, we're coming up into this resistance right there. Maybe we can get on through. But this has got a long-term downtrend cooking here. And we're still lower high. Still lower high. This can reject off of here. It's just up in the 40 area, 5 more bucks up. And then come all the way down here. That'd be like a 60, 75% haircut. Which you take it on and apply it to the leverage ticker, INTW. That's 150% downside when you 2x it. Yeah, there's danger here. So I booked out that profit for that reason. Downside risks have elevated. Here's a Boeing 2x. There you go, goose. Boy, put that on your list. You can just buy shares of this instead of trying to buy options on Boeing. But I'd wait for the downside first. RDTO. And it's 2x on leverage. 2x leverage on Reddit. Market roadmap. MRM. Nice pop. It's healthcare. I'm not trading it. Already at the target. BIAF. Dumpster fire. Don't trade it. GFS. It's Global Foundries. That's the downtrend despite the pop there. NLR. Up past the target. Watch for the pullback. It's probably coming. Better health or better home, whatever. Better something. Has a dumpster fire indicator hiding in the shadows there. Don't touch it. I'm telling you. Danger, 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 danger. Most companies that split once will reverse split once, will reverse split again. Just a matter of time. AbbVie looks like got a 228 upside, 337 upside, and that support coming up right there. Circle's another one everybody like. When are you going to get bullish on Circle? When it makes a lower low down here. So would you rather buy at 120 or would you rather get it at 60? If you ride down, it's a 50% downside and you need a double just to get back to scratch. If you just wait for the opportunity for them to prove they can make money doing this, which right now they prove that they lose a bunch of money doing this. A-Lab. That might be done on the upside for now. Watch for a retrace. Temp. I'm trading this one. This is on my bullish list. I'm actually looking for this to pop out bigger, potentially. And you'd be like, well, what are you trading? Trading the 80 strike. Right now, since it's a little below, you can go back down here, 75 strike. Sell some puts. This thing's probably going to pop. I got $2. $2 an option to roll that forward a week. That was just insane to me yesterday. Not trading in the 50K challenge account. This is in a different account. Look at this premium out here. Look at this. You can play 75 for $1.50. You can play tighter in 77 for $2. Play 76 for $2. It's wild. Premium on this thing. Absolute insane. Probably talk about it with Jack later during Market Masters. See the beta running at 3.2. Another one I was chasing was Soundhound. This one, the beta 3.3. I've actually been playing the 15s here. Really spicy. 15s for next week. 30 cents. It already dropped down. It was 40 cents yesterday. So. That's like 120% return right there, just selling the puts out of the money on Soundhound. That's probably going to pop up 29. VRT. Watch for that to drop back down to 120. The RDO. Watch for that to drop back down. Decliners, Costco. Well, here we go. Similar to the bros. If you wanted to play that, something like a 880, 840 put spread could get you there. That's gonna be something crazy. That's okay. So that's potentially 3 down. ABC. I would have liked to see that just a little lower to give me confidence that was done. And I don't think we're done yet because look at this bigger high. And I think we got lower to go. And this may go lower low. I don't like that. Restoration Hardware coming back into supports. Look at that. Look at that. Classic. Right there. Boom. And pull back. Hold that uptrend. Got just a little below it, but clear it up. Clean it up. Look at it. Haven't done the big upside breakout yet, though. So this is still a point where I would have a little bit of caution going. It's on my bullish list. Yeah, so we're looking for support right here. Hold that. Turn higher. Look for that break on up to 360, possibly 400, maybe back to the all-time high. Now, if we get below this, it's where revisiting the low becomes a real possibility back down in the 120 area. So that big risk, big reward potential there. Baba still churning in here. More upside to go. We're just sitting at that pot, taking a breather at this 618 level. If we push on through, sets up the 410 area. This is what a bottoming initial move correction. This took a long time here. It's bottomed in 2022, rebottomed in 2024 with a higher low. Now we're setting up bullish price action with these pullbacks. probably continue on for a couple years. NTES hit targets. Watch for the pullback. We could go even higher, but low probability at the moment for me. Well, wow. I just made a jump up there. It's biotech for you. Be careful. Just makes crazy moves. Dill. Move down, retrace. So it has the ABC potential to drop down back down near 100. And if we can push back through that gap down. So we did this. There was a gap down and we filled it, but then we pulled back. Push back through it. Here's the near-term upside, and then the bigger upside right up here. For continuation, C-Web. That's a 2x bull on China. I actually have a put or a call spread on K-Web. Looking for this to get some continuation right up in here. I have a 41.47. $6 spread. Paid like $1 for it. Like 5 to 1. Risk to reward. When I paid for it, you gotta evaluate. So Wayfair, stopping here, can turn back down to the roadmap line. But if we can confirm that break above those highs, it's rejecting that so far. If we get above that, potentially go up more. Back to that consumer discretionary spending stuff. Ale. Oh, it looks like that one just ripping to the target there. Boom. There was the high, here was the low. And we already tagged the target, so that one's done. COP. Here was the high, here was the low. On the way, 100 on that micro, but this is a downtrend, so be careful. And then NEE. It's kicked off back a couple weeks ago, kicking off again, 78 targets. It's just been chopping. And then we 79 target for the last one. So pop up here and wrap it up here. That's it. Be careful out there. I'll be live on Market Masters at 11:30. Watching for these levels on S&P. Ooh, that's nasty. See what we did. Watch for that low. Right below it. Right there. All right, everybody. Have a great day. I'll be back again. Same bad time, same bad channel on Monday. 9:15. Do it all over. Look for stuff moving. Look for opportunity. Wrap up the quarter, right? We got Monday, Tuesday. Last trading days of the quarter. Then we'll be on to October. Extra spicy. Have a great day, everybody.